Creating a pitch deck is not an easy task, and if you've never done one before, it can be very daunting. In this film, I will outline some simple steps to consider when creating your own deck. For those of you who have already created a pitch deck, do use this as a guide to review and critique your deck. It's a good way to check that everything is up to date and ask yourself, does it still reflect my company and our business opportunity? So let's start with a simple definition of a pitch deck. A pitch deck is a brief presentation that provides the audience with an overview of your business. Typically, it's presented as a set of slides. The purpose of the pitch deck can vary from engaging potential collaborators to raising funding. We will be focusing on an investor pitch, which is when you're looking to raise equity finance from a business angel or a venture capitalist. Approaching investors can be both exciting and unnerving. But remember, you are selling your vision, your team, and your exciting technology or business opportunity. This is your window of opportunity. You need to make sure that they can see the exciting opportunity and demonstrate that you and your team can make it happen. So what is it that you need to include? And more importantly, what should you leave out? I always start with the audience and think about the pitch from their perspective. If you were a business angel, what would you be spending your hard-earned cash on? If I were a VC, I would be asking myself, is this investment going to give me the big 30 times return my stakeholders expect? Any investor is looking for 7 key things: a great team, a fantastic product or service, a strong intellectual property or first mover position, an exciting market opportunity, a robust business plan, a credible valuation or funding strategy, depending on what is relevant to your sector, and finally, profit. Remember, investors are in this to make money. They want to know what returns they can expect, and most importantly, when. Typically, investment pitches can run from 5 to 15 minutes. This example is based on a 10-minute pitch, so it is easy for you to shorten or lengthen as appropriate. You should aim to tell your story with 10 to 12 slides in 10 minutes. However, you may want to include a couple more and have backup slides for questions and answers. I will cover the important information you need to include and a sensible order in which to present it. But this is by no means a magic formula. I would advise that you use this information to build your own proposition. Do amend the content and order to tell your story in the most compelling way. Your first slide. Ask yourself, what impression do you want to make? This is going to be up on the screen before you start to speak. I would suggest that a strong image, vision, or value proposition statement can be very effective. And don't forget your logo, name, and contact details. Follow this up with an elevator or value proposition pitch. This should be no more than 30 seconds long and will set the scene and expectations. It is important that this grabs attention and piques interest. You want people to be listening to you and not looking at their phones. The third slide is about your product. Here, you will briefly outline your product and service. Describe the big problem you solve and focus on the key product features. Spell out what makes you special and how you are different from your competitors. You must explain how you deliver specific benefits, and if you can quantify the value, do give relevant examples. Do not fall into the common trap of giving a very technical explanation. For some technologies, it may be worth adding a supplementary slide here, for example, outlining technology roadmaps or providing more information on intellectual property. Do explain how you will stop someone from copying your technology or stealing your market share. If you have key licensing partnerships, introduce these too. Your fourth slide is about the business and how you are already or will be making money. For an early stage or pre-revenue company, you will need to explain how you have arrived at the model. Back up any statements with your market validation. If you have made any assumptions, explain the logic behind this. For those of you in revenue, your focus should be on how you plan to make more money and scale the business. Whatever stage you're at, you should highlight any potential sources of revenue and income generation, for example, grants or consultancy work. Your next slide is traction. This fifth slide is very important, as investors want to know in detail how you are going to make money. They need to know who your customers are and how they will buy your product. Of course, this needs to be appropriate to the stage of your business. So if you are pre-revenue, discuss your market validation. They will want to know, how did you identify your customers, and then how do you plan to reach them? If you have test sites or key collaborators, this is a time to discuss these in detail. For those of you with sales, no matter how early, discuss the margins. Nothing beats a profitable sale. This is also a good place to illustrate your commercial milestones. Your sixth slide introduces your target market and its size. Here, you can talk about the trends and also identify any key drivers. Remember, it's important to cite sources that are credible as evidence. You should illustrate the total market size and then what percentage share you can realistically capture. This is known as your addressable market. Do make sure that the numbers link back to your commercial and operational plan. There are various ways to calculate market size, and I always advise that you use several approaches. A starting point is a top-down analysis, but this on its own is very rarely a credible estimate for an early-stage company. The bottom-up model is more realistic, but you should also consider some other prioritization modeling. This segues nicely into your seventh slide that introduces your competition. Competition is good as it proves that there is a market. Many of you will be working on potentially disruptive technologies. For you, it's important to explain why customers would want to change from their current practice. The most common ways to illustrate the competitor landscape are a table comparing key features and benefits or a Boston matrix. Here you can reinforce and highlight your unique selling points and how you differ from others. Your pitch will now move on to the financial and operational delivery. Slide number 8 introduces the team who will make everything happen. Investors invest in people. This slide is all about your credibility. With a very early stage technology, they will need to be convinced that you have the capability to take this business forward and that they can work with you. Do include your non-executives and any scientific advisory roles. It's wise to identify any skills gaps, especially if the funding you are seeking is to address these. This leads on to slide 9, finances. Typically, you will show cash flow projections for the next 3 to 5 years, including income from grants, sales, and commercial collaborations. Identify next investment rounds, funding requirements, and key milestones that will lead to an increase in company value. If you have any income, you may want to show the previous financial year's profits and loss and your performance against targets for this financial year. With pre-revenue companies, the investors will focus on the next 12 to 24 months. One handy tip is know your monthly burn rate. There are various ways to demonstrate your finances. The most common are as a graph or a table. Remember, investors are always skeptical, so be prepared to defend any assumptions you have made. In some cases, it may be worth having a spare slide with an alternative scenario. If you are very early stage, you can base your model on a similar company. This can be very useful when justifying the figures you have outlined. All the slides so far have paved the way for the ask. Now is the time for you to introduce the amount of money you need and how you intend to spend it. You will be expected to link this investment to the percentage equity that it represents. For example, if you're asking for £500,000 and you offer 10%, that equates to a £5 million valuation. It is much easier to justify valuations when you're at a later stage and have investors on board. If you are an early stage company, you should set a realistic value and may even want to discuss this offline. However, you may be pushed to give an answer, so be prepared. To learn more about valuations, please watch Ian's video. Whatever stage you're at, you should be linking the expenditure to key activities and milestones. Be aware, some investors may only give funding in tranches. Your next, the 11th slide, identifies how and when investors can expect to see a return on their investment. We call this the exit slide, and it should be benchmarked to comparable real companies wherever possible. This slide may not be relevant for early-stage companies that are subject to long regulatory processes, such as healthcare or a slow-to-change supply chain. In this case, your investors are unlikely to expect a return on investment within 3 to 5 years, but they will want to know what your exit strategy may be, such as acquisition, and what trends could influence this. The last and 12th slide is your closing slide. Leave your contact details up on the screen. Always thank the investors for their time and be ready for their questions. In summary, you want to make a strong impression, so your slides need to be professional and of a high quality. There are many templates and resources on the internet to inspire you. Make sure you get the right balance in timing. Avoid spending too much time on the technology and the problem you solve, and spend relatively more on the market, traction, and finances. Keep the slide simple, but if you are dependent on animations, sound, or embedded video links, be prepared, just in case these don't run smoothly. Rehearse your pitch on your own and in front of a friendly and critical audience. Check that it flows, that it's clear, and makes sense to them. Ultimately, this will be a negotiation process. Be confident and be prepared. Now it's time to create your own pitch deck.